Hello and welcome to this week's webinar with me, David Jones, and Aondo Markets. This is our market outlook webinar. This is one we do every Wednesday lunchtime. Runs for half an hour, and it splits down into two parts. If you're watching the recorded version of this, it was held live on Wednesday, the 17th of Jan at 12:30 in the afternoon. So what we do, we look at the major markets, see what's going on, see what's moving. And there's been a lot in the last week. We've seen big breaks, pound US dollar, euro dollar, oil. So plenty to look at today. And we also will do a bit on strategy. So we'll take a look at different trading strategies every week. And this week we're going to look at how to trade breakouts, which again, I think is particularly relevant given what's going on in FX, commodities, and also stock markets. You know, if you look at yet again yesterday, US stock markets hit fresh all-time highs. You know, these markets just at the moment just seem to go up. So we'll look at that. The market did reverse during the day, but I think trading breakouts when we've got strong trends is an interesting strategy and pretty essential, I think. But let's get going. So I think that the risk warning has been up for long enough. So let's start. If I can find what I'm trying to find here. Here we go. So this is Aondo's trading platform. So this is Trade Hub. So Aondo are maybe better known for social trading, where you copy other traders, but of course you can do self-directed trading as well, where you do your own trading. And I think to start off with, let's take a look at pound US dollar, because big break last week. If you've been attending these webinars for a while, you'll know that you know, it's been bullish. The pound has been positive for more than a year now. Let's just wind this back. So we had that weird flash crash in October 2016, where the market traded down, depending on whose prices you take, 120, 119, something like that. We saw those lows retested in January last year, so this time last year. But since then, the story has been one of the pound recovering. You know, we've got sort of uptrends all over the shop for the pound. So let's just pick up on some of those. So it's been bullish. You know, any weakness in pound US dollar has been a buying opportunity, buy the dips, the usual sort of approach. And we saw the highs set at about 136.60 pound US dollar middle of September. Bit of a wiggle around towards the end of last year, back towards 130, came back up to it, has a little go, doesn't get anywhere near it, sells off, came up to it again, December-ish, and then bang, we saw the move last week. And I think, as is so often the case with the pound over the last 18 months, so much of it is politically driven. And one of the big catalysts, I think it was the Dutch and the Spanish, wasn't it, last week? The Dutch and the Spanish governments saying that after Brexit, they still wanted the UK to have a close relationship with the EU from a business point of view. So not surprisingly, the market sees that as a positive, and away we go. You know, so let's just take it back. So we now, pound US dollar, we've now pushed back. You can see the dashed line now where it's currently trading. We've pushed back into that zone from referendum night. So when the polls closed in June, whatever it was, the 23rd, wasn't it, 2016, the polls closed. The news came out that it looked like Brexit was going to happen, or the vote was going to go for Brexit, and the market absolutely fell off a cliff. So we've pushed back into that zone. And I think it's a big deal. You know, it doesn't mean we're going to go completely sailing higher from here, you know, in a straight line. But you know, I think we can be a lot more aggressive with targets now. I think, you know, if you look at what was happening in the run up to the referendum in 2016, 140 was clearly a level on the downside. So I think that looks to me to be a you know, a sensible medium-term target for pound US dollar. But as is always the case with these breakouts, I think that was the level. 136.60 was the previous high. I think that the big thing is how it reacts after. You know, we are at some point going to get a sell-off from where we're currently trading. Where is it now? 137.80. So we are going to get a sell-off for there. And it's all about, well, okay, do we see the buyers come back in? You know, and there's so much support left following this break. You know, so even if we saw a decline of 300 points from where we are now, we're only back to where we were a week ago, just before the break. So you know, moved back down to the mid 134s. After that, we've got support at 133, then 132, then 130. So it's basically all around numbers, almost from 130 through to 134. I think it's, you know, it's quite a big deal, this break over the last week. Adding into it is dollar weakness. We've seen dollar weakness across the board against everything, I think. So, you know, that's clearly lifted the pound as well. So big break over the last week. 140 looks like a sensible target. I mean, it's only, what, 200 odd points away from where we are now anyway. But let's watch. A pullback would be nice. Bit of a sell-off. Market dibbles around somewhere, then starts to recover. Gives us a nice place to get in. But I think it's a big deal, and it does suggest, famous last words, that we should see this market moving higher. So that's pound US dollar. So big break last week. Same sort of thing in the old, the euro. So euro dollar. And again, it was political, I think. We had, there's a couple of things. We had the minutes from the European Central Bank meeting last week that came out, I think, suggesting that, that the European Central Bank may look at adjusting its monetary policy earlier than people were thinking. So maybe reining in some of the stimulus, blah, 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 all that sort of stuff. But we also saw in Germany, I think, progress in, I think, forming a coalition or agreeing with all the parties. So again, you know, political things affecting the euro. So this was the level. Again, it was September highs. This is a weekly chart we're looking at. Let's just stick with this for a couple of minutes. So the September highs almost at 121. That was the level. Euro broke through it. We're now, what, 100 or so points above it. Again, like the pound, it's a big breakout, you know, and it sort of completes this pattern that we've seen in euro dollar going back almost 3 years now, where you know, got absolutely clobbered from 2014. So the highs in 2014 around about 140, so 2,000 points, 1,800 points higher than where we're trading now. Absolutely falls off a cliff, and then spent for the best part of almost 2 years having this massive sideways pattern, and bang, away we go. We broke out through this in the summer of last year, sold off a bit, broken out again through the 2017 highs. So this is bullish. You'd have to say, I think, if you're looking at sort of levels on the charts, there's not much in the way of resistance, because this sell-off was so steep for euro dollar. We didn't have much in the way of rallies on the way down, but I think, you know, this sort of zone looks like an obvious one to me. 126 through to maybe 129. So what's that, 400 to 700 points higher than where we are now. As usual, you know, we're not going to get there in a straight line. Let's flip it over to the dailies. Here we go. So let's pick up. Let's pick up on trends. Let's put some squiggly lines on this as well, because I know people like the old squiggles. So let's put relative strength index 10-day. 10-day? Yeah, 10-day. Let's just flip that. It's 10. Here we go. So overbought, as you would expect, after such a strong rise, but it doesn't necessarily mean the market's going to go down. We do actually have bearish divergence. We've talked a bit about this in the past, where the market pushes to a high, sells off, market pushes higher, but look at the oscillator. It's making lower highs. So this, if you really wanted to go short, that could maybe add to the argument that maybe this is getting a little bit overextended. But let's zoom in on a bit of the trend, because again, I think, like pound US dollar, what is going to be interesting is what happens when this market corrects a bit. You know, we've got the lows left from November last year, around about 115.50. Great trend, great little trend bobbling along. Big level at 119. It's the lows before the break. So again, only from just over a week ago, those 119 lows for euro dollar. Trend line support as well. So all sorts of things that if we did see the market drop 200, 250 points from here, it does look like a buying opportunity. Let's take a look on the hourlies. I don't think it'll tell us much more than what we're seeing there. Not really. You can see that 119 level. All right, if you're really desperate to buy the euro, there's an argument to be a buyer now. You know, we're hovering just above yesterday's lows. So yesterday's lows were, I'd say it's a valid argument to be a buyer, you know, because yesterday's lows were, what were they? 121.95 was the low yesterday. The market did push higher, so we have extended that trend. So for the more aggressively minded out there, we're seeing a bit of stability come in now. Maybe if you really want to have a punt, stop us below yesterday's lows, looking to see if it can move back up to the highs that we saw late last night, 11 o'clock last night. But the bigger picture view is that, you know, 119, if we start selling off, I think 119 is the level to look at. So it's really interesting. I think the moves last week, in the euro and the pound beginning of the year, you know, suggests that the trends that we saw last year for these two currencies against the US dollar still very much intact. Let's look at the two other majors. A bit different story on the two others. Let's look at dollar Swiss and dollar Japanese yen. I must admit, I've been surprised by how much this dollar Swiss franc has sold off. Let's just take it back a bit, because we turned around dollar Swiss last year, so the summer of 2017, turned around pretty much where it turned around in the summer of 2016. So it was a big level, running from sort of 94 through to 96. The market recovered really strongly, far too strongly for me to get on it. And I was looking for the correction and looking for the market to hook higher. But because of this dollar weakness, it's pulled back much further than I thought it would. So yesterday, you know, the highs that we saw in November, just above 1, yesterday trades down to what, 0.96. So we saw a 400-point move. We are seeing strength coming back in. For me, it's a bit early. It's only today we've seen the strength coming back in. We do have the bullish engulfing for the fans of the candles. So we've got today's candlestick so far. If we closed up here, would engulf the previous day's candle. So it does suggest something of a handbrake turn in market sentiment. I do think, you know, that maybe this pessimism towards the US dollar in the short term, at least, has been a bit overdone. You know, when it starts to feel like every third tweet on Twitter and every fifth headline in financial press is about what the market definitely going one way, that's precisely the time it turns around. So I do think that maybe it's getting a little bit overdone, this dollar weakness, and we are due something of a rally. So I think dollar Swiss is an interesting one to watch. I think maybe for me, maybe the short-term trade here is going against the trend. If we closed positive today, look to be a buyer, with the tightest I'd want to stop is underneath today's low. So somewhere below, at the moment, 95.75. But I think it's going to be interesting to see if we do see maybe some of this US dollar weakness unwind. If it ends up being wrong and it cracks this level, again, we're looking back to what happened down here. Big support running from, you know, 94.20 through to 95-ish. So I think it's interesting in the immediate whatever time frame to see how this dollar Swiss goes, because I think maybe people just getting a little bit too negative about the US dollar. And let's talk about dollar yen finally. Dollar yen, again, I've been surprised by this dollar yen move. The big picture view for dollar yen has not changed for a year. So the dollar Japanese yen, the highs that were set, and what am I looking at here? Beginning of last year. Let me just take this out. I should have stuck with a daily chart, really. Let me flip it back to a daily. Okay, the highs that were set beginning of last year, up here, 115.50-ish, 115.70, that sort of area. They did a great job, and they continue to do a good job all the way through, and then lower levels coming in at 114.5. So any strength, any significant strength in the dollar against the Japanese yen looked like a selling opportunity. You know, and last week we bumped up a little bit. I thought we maybe squeeze a bit higher, but the market's really turned. Just yesterday, dollar yen slipped to its worst levels since September last year. But overnight, I'm watching this closely because I've got an options trade on dollar yen where I could really do with it being 112.50 the second week of February. So it's maybe skewing my opinion a bit here that I could really do with a 200-point rally from where we are. But the market has broken this old support. It's been really weak. Broke through the old support around at 110.80. Overnight, it did have a look at 110. And it's held, you know, round number, blah, 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 all that sort of stuff. So again, maybe if you if you thought the short-term weakness has been overdone, there's an argument. Let's see how today ends. You know, like dollar Swiss, we've got an engulfing candle going on. Oversold RSI down here. So maybe there's an argument for a bit of a squeeze higher in dollar yen. But I think if we lose 110, you know, there's a lot of fresh air below here. So it's interesting. I think, you know, the pound and the euro are interesting because of what's going on politically. The dollar is interesting against dollar yen, dollar yen and dollar Swiss, because, well, do you think it's overdone, or do you think actually there's much more of dollar weakness to come? But I think we've got some obvious levels to watch on these two over the next couple of days to see how that pans out. So lots happening at the moment. We'll let's take it. Actually, I was going to do the strategy thing in a minute, but before we do that, should we just have a quick look at the cryptocurrencies, because they are, they're not out of the news much, are they? The old cryptos. So let's take a look at Bitcoin. Where is Bitcoin? I'm sure I've got that ridiculous market here somewhere. No, I can't find it. Hang on. It's I've definitely got it on my watch list though. So I will start off by saying these are ridiculous markets, right? The volatility in these markets is off the scale, and I think it's not like anything I've seen. I can't even remember. It's almost, they're almost like they trade almost like these little AIM stocks, where people buy them at a penny and hope they go to 2p. And I think they're impossible to trade sensibly. I think there are plenty of brokers these days offering them, like Aondo, and of course they're just providing a service. But I think plenty of people are getting, from the people I speak to who've never traded before, are getting sucked into trading, thinking these cryptocurrencies are going to go through the roof. And the problem is you just can't set any sensible levels of risk. I mean, I admittedly traded it a bit last year, but it was much easier last year because it was just going up, sort of October, November, December last year, it was just going up. But let's just look at the moves in Bitcoin. So Bitcoin trades up to nearly 20,000 just before Christmas. Today, not even a month later, it's almost halved. We're sitting at 10,000. I think 10,000 might be a big psychological level, but who knows with these markets? I think they're really driven by panic selling. And the one that's really taken over from Bitcoin in recent weeks, which ironically was an incredibly boring market last year for much of it, is Ripple. And this, for me, I think Aondo have suspended trading on Ripple, which is maybe doing a lot of people a favor there. But this, for me, it is almost the epitome of the stupidity of trying to call these markets. I mean, Ripple touched three. So one Ripple was worth $3 or something. The 5th of Jan, so 2 weeks ago. At the moment, you can't see on here, it's actually trading at 1, right? So it's gone from hitting all-time highs to dropping 70% in 2 weeks. People will be getting toasted left, right, and center. So for me, even though you may think blockchain, whatever that is the future and all that sort of stuff, then that's great. So maybe as an investor, if you want to invest in this sort of stuff and you just buy it and forget about it. But I think trying to trade it normally, because of the levels of volatility, makes it incredibly hard. And I just think people are getting burnt left, right, and center trying to trade this stuff, particularly if they're trading on leverage, because they're, any market that goes up 200% and then drops 70% in 4 weeks, I don't know how you can practice any sensible level of risk control in a market like that. They're fascinating to watch. It's like a whole market sentiment, market psychology that would take 10 years to play out in the stock market, plays out in 6 weeks in the cryptocurrencies. But I think as Warren Buffett said last week, and who am I to disagree with him, it is going to end badly. And I think we're seeing maybe part of that now with the moves we've seen over the last couple of weeks in the likes of Ripple. There we go, rant over, but they're always interesting to watch. Right, let's talk about breakouts. What I'm going to do, first of all, breakouts are, I think they're, what can I say about breakouts? I think if you're time poor, which like most people are when it comes to trading, most people aren't sitting there in front of a screen all day, they've got proper jobs to do. I think breakouts, particularly on individual shares, are an interesting way of maybe finding opportunities in the market. So just so we know what we're talking about, let's just flip over and bring that up, and I'll go through the scribbles and then I'll talk about it. If it would actually stay open, hold on a second. Right, here we go. So when we talk about breakouts, let's talk about it from maybe an individual shares point of view. It's when a market, it's maybe done this. So like the euro and the pound we're doing, gets to a level, can't get through it. So let's say that level is 100. Let's say it's a US share. We'll call that level $100. So it can't get through $100. So clearly the market view is at 100 it's too expensive, like we saw on the FTSE all last year until it finally broke. And then it's when this happens, bang, then that's the breakout. So the classic signal is that something has changed in the market. Market sentiment has changed. So really, we want to be a buyer. But the question always is where does your stop go? There are a couple of ways of trading this. You jump on the break straight away. So maybe you buy it at 101, and then you hope it goes, or maybe you're going to be a little bit patient and see if the market wiggles around a bit, and then buy it there or buy it on the second break or whatever. But either way, I think breakouts are well worth paying attention to. I trade most of the stuff I do. I do some FX option stuff, but the other stuff I do is mainly equity. So at the moment, I've got about 32 open trades on US S&P shares, because again, the market's been so strong, blah, blah, blah. You want to go with the trends. And one of the things I look at is breakout. So it's all about, where to trade it. So I actually did a little bit of research before coming into today. So let's jump on the platform and look at some shares that are breaking out. So yesterday in the S&P, so S&P is 500 shares, even though the market ended up selling off quite heavily during the day, there was still, out of 500 shares, there were still 39 that made at least a 1-year high. So a 1-year high is a good sign that maybe we got a breakout going on. So let me show you. So 3M is one of them. So let me show you what it is we're talking about and maybe how we want to trade it. Here we go. Where's the chart? So let's flip this over to a daily. And I think, again, if you're a bit, time poor, it's a way of coming up, you can sit down on a weekend or something, a way of coming up with a short list of stuff that maybe you want to trade in the following week. So if we go back, let's go back to the summer of last year. I mean, as usual, it's, hindsight trading, the easiest form of trading. If we took the highs from June last year, so 3M shares hit $215, sell off, try and get near it, sell off quite heavily, back to 200, come back again. So again, this is almost like the little squiggle I drew, just can't get through 215. So it's bang. When this happens, something has changed. So for a good 3 months, 3M could not break 215. Things change, and away we go. So the question is, do you get in on the breakout or do you wait for a pullback? In this example, if you'd have waited for a pullback, it never really came. So it's all about where do you set your stop losses. And I think this is really important. I think the closest I would want it is the low before the breakout. If we're buying into a breakout upwards, whatever it's called. I'd want, if I was buying here at 17, I would want my stop at least below here, probably ideally back below there. Yeah, so give ourselves a bit of wiggle room. So looking at 3M yesterday, so we've had, again, a couple of little breakouts. We've had a breakout there where the market it broke out through 238 a share in November, touches 245, sells off, come back to 235 and bang. So maybe we're a buyer now with a stop under here or a stop under here. But hopefully, you can see that the power of these things, particularly as we have at the moment for US stock markets, incredibly strong markets. Who knows when it's going to end, but already this year, the Dow is up 5%. And I think it's the best start for a year since 2003. So we have plenty of momentum in these markets. Let's take a look at another one. Actually, this is, hang on, let's have a look. What can we pick? What else was breaking out today that I'm familiar with? Johnson & Johnson. Let's take a look at Johnson & Johnson. So, and the thing with these is, because you're looking on a daily chart, you're not sitting there worrying about every little wiggle in the market. And I think that's a much better way of trading. Let's have a look at these. Here we go. So the breakout actually, the breakout actually happened a couple of days ago. So, but our levels, look, if I can click on the right thing. There we go. So again, there's the level on Johnson & Johnson. So it had a little look through 9th of Jan. So 144.50, and it breaks down. So again, the question is, so the expectation is the market's going to move higher from here. The question as usual is, where did you put your stop? The closest I'd want it is back here. It's maybe a bit far. Maybe we get a sell-off, blah, 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 blah. But, hopefully you can see, because there are loads of examples like this, because US stock markets have been so strong. Back here we had a level similar to the 3M setup at 137. Market breaks, does actually pull back. So if we were buying at 138, we could have had a stop somewhere, really good place to have a stop, the other side of 129. So I'm a really big fan of looking at these things rather than squinting at a 10-minute chart and trying to figure out where's the DAX going to go in the last half an hour. is look at take a big picture view of these markets. So that's trading breakouts. Pretty straightforward. And there are on shares, there are lots at the moment. Let's get back to our markets so we can try and aim to finish at 1 o'clock. Let's take a look at the US. Of course, it is the market that always goes up. So here we go. Here's our S&P chart. So yesterday, I think, was the most volatile day for, I think we've got to go back to here, haven't we? Going to go back to maybe a month or so, something like that, or 3 weeks, because it is such a low volatility market. But nothing changes. We say the same thing every week about this market. And I think I put on Twitter last week, not surprisingly, most people are short. Most retail traders trading the S&P or the Dow are short. I think I put up one broker's clients were, I think they were about 56% of clients who had a trade on this market were short. Another broker's clients, 63% who had a trade on the market were short, because people cannot trade with trends. Okay, they all want to try and call the top, and it's been a really expensive game for over years now. But particularly the moves we've had since the presidential election in 2016. So yesterday, S&P hits fresh all-time highs again above 2,800, but did actually reverse during the day. But from a bigger picture point of view, so what? It really hasn't changed anything. If we're going to change this trend from the last 12 months or so, the market needs to break 2550, so 250 points from where we are now, near enough a 10% fall to even threaten that trend. So at the moment, any weakness in the S&P looks like a buying opportunity. If you look on the hourlies, I think again, if you're a short-term trader, the levels to watch today, that was the move yesterday. And you can see the volatility for a change, and the market pushes out to fresh all-time highs and then promptly dumps. And actually, I think the highs from the lows from the day before just about held. So really short-term levels on the S&P. These lows from end of last week, 2765-ish. The lows from yesterday, about 2770. And what's the market done? It's bounced back again today. So already going into today, we're expecting the market to open higher. So and again, breakouts, and you can see on the hourly chart here, breakouts, the same sort of thing we were looking at before. Market makes a high, can't get through it, bang, breaks, off we go. Makes a high, has a bit of a rest, bang, off we go. So again, the breakout level for the next few days would be yesterday's highs, just above 2805. If it breaks that, shorts close, fear of missing out, markets moving higher, all the usual rubbish, I would expect it to carry on. So for now, US stock markets have started this year exactly how they ended last year. And of course, we got the break on the FTSE finally. On the FTSE, if we flip that over, I must admit, I never look at the FTSE, but here we go. That was our our big break we were looking at last week, I think, on the FTSE. All through last year, because the FTSE is always an odd one, of course, because so much of FTSE 100 constituents make their money in a currency other than the pound. So if we have a strong pound, we had the pound recovering last year, that does weigh on the FTSE. Or last year, the FTSE could not get through 7,600, and then finally the Santa rally, the market did break 7,600 and has moved a couple of hundred points higher. So on the FTSE, as with all these other markets, stock markets at the moment, any weakness looks like a buying opportunity. Let's flip on the hourlies. Here we go. So there's our trend from wherever it is, December lows. That's a great trend if you're in it. I wasn't in it, but that is a great trend. Hardly a sell-off. Bit of a sell-off yesterday with US markets weaker, but it's a case of pick your support levels. They're everywhere, aren't they? We've got bit there, bit there. So many big support down here, end of December. So chunks of support on the FTSE. So at the moment with stock markets, even though you could say it is ridiculous how far they've come, people still buy the dips. So I think it's the least painful trade is to follow that big trend. Let's wrap things up. We'll look at gold and oil as usual. Let's have a look at crude oil. Of course, we've seen this big break in oil as well over the last whatever it is. So so it's a really big move. I'm surprised it got there that quickly, but the highs from 2015 we're about $63, I think, something like that, near enough. Okay, and it's gone sailing through. So again, it's a really big break in oil. I don't think we should be expecting $100 a barrel anytime soon, but if we go back to our trends, because this is the relevant bit, the trend that we've been seeing since last summer is our trend. Sticking with the daily chart, we've got support at 63, the low from about a week ago, support at 61, trend line support about 60, support from the old highs at 59. So again, I think any weakness in oil, and it's sold off for the last couple of days, looks like a buying opportunity. The sensible thing is to wait for a bit of strength to come back, put a trade on if you want to trade it, buy it, and put a stop loss under a major low. Let's take a look on the hourlies, but really strong start to the year for oil. Here's the hourlies. So again, if you really fancied having a punt on the price of oil, we've got the lows from a week ago coming in ahead of 63. And we're seeing maybe a bit of support coming in here, bigger support back out here ahead of 61, and then lows of pockets of support left. So these trends, actually all of them, euro, pound, stock markets, oil, breakouts over the last few weeks, very strong markets still. And finally, gold. Let's have a look at gold. Gold's had a hell of a move, actually, isn't it? Since last year, since just before Christmas. I must admit, I was not expecting that move. So it was trading at $1,235 ish, and it's $100 higher in about 5 weeks. So, and I just think, even though I do think that the path for gold over the next few years is up, I just wonder how much progress it's going to make in the short term. We've got these old highs at 1375 from July 2016. Then we've got the highs from last year at 1357. So I just think it's a bit overextended. Let's put the squiggles on and see what they tell us. So I just think, even though I think we have seen a reversal in gold over recent years, what a lovely color that is. It is looking overextended, a bit of bearish divergence going on. The market's pushed higher. The RSI has made a lower high. So again, if you really wanted to be short gold, it looks like a good level up here. Maybe back down to the mid 1200 and somethings, but big levels to watch on gold for the breakout. This whole 1375 zone. So there we go. We did a lot of stuff today. So I think that maybe the immediate stuff to watch is dollar yen and dollar Swiss, to see if this US dollar weakness has maybe gone a bit too far. Clearly, pound US dollar, the test is going to be what does it look like when it starts selling off, and everything else. Stock market's still strong, and if you want a more relaxed approach to trading, I really would suggest having a look at breakouts and strong stocks and running positions over days and weeks, rather than trying to jump in and out of stuff willy-nilly during the day. That's it. We'll wrap things up there. If you want to watch any of this again, I think the recording gets sent out automatically. Thanks very much for coming along. We'll do it all again in a week's time, and who knows where Bitcoin will be then, or if it'll even still exist. So we'll do it all again next week. I'll wrap things up there, and enjoy the rest of your afternoon.